I will call the Silicon Valley Clean Energy Audit Committee meeting. I will call the Silicon Valley Clean Energy Audit Committee meeting to order on Monday, October the 6th at 1:07 p.m. May we have a roll call, please? Since not all members of the audit committee are appearing in person, we'll take all decisions via roll call.
Okay, Chair Mekachek.
Present.
Vice Chair Lopez.
Here.
And joining us remotely, Committee Member Saka.
Here.
I'll note that Director Wilson is absent today and this meeting has quorum.
Thank you. With that, we've got a consent agenda, consent calendar. Item 1 is approved minutes of the February 28th, 2025 Audit Committee meeting. And the minutes were distributed prior to this meeting, correct? If that's the case, what I'll do is I'll open this for public comment. If you're a member of the public, either appearing in person, and there is no one appearing in person, and if you're appearing remotely, please raise your virtual hand. No public comments on this. I'll close public comment and bring it back to the audit committee. Any comments on the minutes? Any discussion? No? With that, I think I'd be looking for a motion then.
I'll move approval of the minutes.
We've got a motion and a second. May we have a roll call vote, please?
Yes, Chair Lopez.
Aye.
Vice Chair Lopez.
Aye.
And Member Sanga.
Aye.
Thank you, that motion carries.
Motion carries. Then getting to our regular calendar, item 2 is implementation of GASB 96, accounting for subscription-based information technology arrangements. Our CFO is going to introduce this item.
So, Chair, before I introduce this item, I forgot to tell you, I wanted to give an update on an item we discussed at the last audit committee, which was implementation of GASB 62, rate stabilization.
Yes.
I may do so.
So that's technically not on the agenda.
Oh, I thought this was to be like a CEO part of the update.
Yeah, the CFO update. I guess we didn't put a CFO update on here.
Sorry, I don't understand it.
Okay, so if that's fine, no, I would like to hear that, but it's part of a CFO report. We're not making a decision on this, and it's just you informing the audit committee. If that's okay with everyone, including council, then we can proceed. Mike, do you concur?
Yeah, I think keep it very limited. But yeah, I think you could provide sort of an update from there, Amrit. We'll take no action on it.
Yeah, there's no action. This is just for information only. The last time we met in February, we talked about implementation of GASB 62 as an discussion item. This was the establishment of the rate stabilization fund. I just wanted to inform the committee that obviously the finance committee recommended that the board approve, and in March the board did approve and implemented our adopting GASB 62. So the fiscal year that just ended September 30th, 2025, which the audit will begin. This will be the first fiscal year where staff will be looking to implement GASB 62, and which basically allows us to defer revenues to the extent it's in excess of 2% of our revenues. So that our net position doesn't fall below 2% of the revenues. We can defer an amount that does not exceed funds that have been allocated by the board, but yet not spent. So we will be taking that opportunity to do that, and I just wanted to inform the committee.
Okay, so it's just, this is your CFO report.
Yeah, I can give some numbers. I don't know if that's for projected numbers. I don't know if that's appropriate, but this will be preliminary.
Mike, is that okay for him to do that?
Yeah, go ahead. But again, just keep it as limited as you can.
Yeah, so this is gonna be a very good fiscal year for us, the one that just ended. We may be in position, if you look at the treasurer's report that was issued for the Wednesday's board meeting, we're looking at maybe slightly exceeding the budget amount. And this could be north of 100 million or so. And we have earmarked funds that the board has allocated that we have not spent. And there's a good chance, we haven't done all the analysis. Of course, Mike hasn't closed the books for September, and we obviously haven't closed the fiscal year books. But there's a good chance that we will take substantial amount, like close to what we have earmarked of 100 million, in deferring it to recognize the earmarked funds that currently is not shown on our balance sheet. So first year we'll do that. Looking at the financial picture, for those of you who've been listening to our board meetings, we know that in upcoming future years, we may not have the opportunity to do so. So we're going to take that opportunity this time. And obviously, we will discuss this in great detail with the Finance Committee.
Okay, thank you. And what I would ask is that it does make sense to have a CFO report at the beginning of an audit committee meeting. So if we could put that on future agendas, then that would be good. And I think that would make everyone happy. I'm looking at Mike. Okay, thank you. With that, we'll move to item 2 on the agenda, which is GASB 96.
And now item number 2. So GASB 96 is something that was implemented a few years ago. Mike Maher, our accountant, who's here, has done extensive review of the guidelines of implementation of GASB 96, and he's going to go through what the implications are and what we have done for prior years that we've closed on, as well as what we're likely to do for the fiscal year we're just closing. So with that, I'm going to turn it over to Mike to walk us through his presentation.
All right, thanks, Amrit. Yeah, so let's go over GASB 96 and how it applies to Silicon Valley. This is a very short, quick presentation, so we'll get through it quickly, but let's start with the next slide. So what's GASB 96? It's a pronouncement that provides guidance on the financial statement presentation of for subscription-based IT arrangements, also known as SPIDAs. So certain software, IT services, certain contracts relating to that are potentially eligible for this treatment. There's some examples: Microsoft, Salesforce, other customer program software might qualify. And for eligible items, the rules say to treat it just like we do for leases, meaning there is an intangible asset that would be recorded and also an offsetting liability. So basically takes these contracts and puts them on your balance sheet, okay, instead of just expensing like you may have. For Silicon Valley, the effective date of this pronouncement would have been the year ended September 30th, 2023. And like all GASB, but this one in particular is also subject to materiality threshold. So there are often small contracts that we can scope out. They're just too small to track. Let's go to the next slide, please. So as Amrit mentioned, we went through all the contracts to determine what might qualify as a SPIDA and documented them and created an inventory for them. And at the end of the year, 9/30, which technically we haven't closed the year out yet, but our current analysis confirms that in aggregate, the contracts that would qualify as a SPIDA are immaterial to Silicon Valley. So, and the same goes for 2023 and 2024, the amounts were not material. We shared these results for the prior years with the auditors, and they concluded that the results are also immaterial. Next slide, please. So just to get a picture of that, at the end of 2025, September 30, 2025, our projected net position, we estimated that the total aggregate asset and liability, were we to record the eligible SVCE as an asset would be less than 0.25% of net position. And so that is immaterial in our opinion. And the prior years, 23 and 24, as I mentioned last slide, they're also immaterial. So there's no restatement required. Next slide, please. So just because we may not have materiality met yet, doesn't mean that won't happen in the future. Silicon Valley is constantly entering into new contracts. And so we are monitoring the inventory list to see if and when materiality is reached to determine if we need to treat these differently. We're also going to consider formalizing a policy with specific thresholds for recognition to help guide the determination of future contracts. So the long and short of it, that's, by the way, the end of the presentation. It's very quick. The idea is we're monitoring these contracts. Silicon Valley does have several contracts that do meet the definition of a SPIDA, but we determined they're not material enough for presentation. And so we are going to continue to monitor and we'll see what happens in the future as new contracts come on. So that's the end of the presentation.
Okay, thank you for your presentation. If what I'd like to do, this is a discussion, so we're not taking any action on this. So I'm not sure, Mike, what the ask is in here, or if you're just telling us this. Is there an ask, or is there what do you want from us?
This is just information. This is information only. I know that this is something that you had been curious about, and I know we had provided information to you over the course of the last year or so. We just kind of wanted to come full circle, showing that we are investigating this. We took a look at it, and we just wanted to come back and let you know where we stand.
Brian, can I ask a follow-up question? Just on your presentation, Mike, you mentioned that as a next step, we bring something forward to the board as a policy. Will that policy define the threshold?
It's something we're considering. We will take it to the finance committee first. Yeah.
So that's maybe where that's where the action happens, Brian? Is that we would adopt a formal policy to SVCE?
And I had a related question. Is there a recommended, either in GASB or just best practice threshold out there, or would you be coming up with your own?
For materiality?
Yeah, or is it the 0.25%, or are we just kind of left to take our best stab at it?
Yeah, I mean, it's a subjective amount. There isn't a hard and fast rule. I know, and this is maybe something that even our auditors who are on can talk about to some extent, although their level of materiality is somewhat of a closely held secret. They don't want to, let us know what's materiality. Auditors want to kind of keep their own amount so they can perform their testing. But yeah, same thing for us as the preparers of the financial statements. We need to determine and use our judgment as to what is material. So as far as a policy, that we wouldn't want to just track everything that's immaterial. A lot of these are very small. It's a tedious process. You need to, calculate net present value of these contracts, amortize them over a period of time. We don't want to create an unnecessary burden, but at the same time, we don't only use materiality to record something, right? There are many things that get recorded that are not material. So anyway, the answer to that is there's no hard set rule for the amount.
Thank you.
Other questions or comments from the audit committee? No? So I'll wade in on this now with my views, and I'm saying this as a licensed CPA, not in the United States, but in Canada. I can't be associated with what I believe are misleading financial information, with misleading financial information. And I'm clearly going to be associated with SVCE's financial statements. And while I appreciate what you're saying, and we can hear from Kellen on this, but I would say, and as background, the city of Monte Sereno is implementing financial accounting software, and broader than that, than just financial accounting. And we're doing that under a SPIDA arrangement. So that's how I really dug into this. I started understanding it. And I think sometimes that in certain areas of government accounting of GASB, I think it's employment for accountants. You know, I'm not sure it influences the decision making. Having said that, when I look at what the accounting requirements are, I'm like, I think we missed this. I think we totally missed it. And that's okay. And I would, for our auditors at the city of Monte Sereno, I'm going to ensure that there's a line on the letter of representation that management signs off on to saying that they've disclosed all SPIDA arrangements, SBITA arrangements. And I would think that that should be a common representation that auditors should ask for government entities. And in terms of materiality, you can say it's a secret, and that's okay. The question is, of a user of the financial statements, what's materiality for them and what's their decision making? And you talked about, Mike, at the beginning of your presentation, it's just like, I think it's GASB 87, which is leases, is that correct? So you say, okay, well, if Silicon Valley Clean Energy reports leases in their financial statements, they must be material. Otherwise, you wouldn't include the leases, right? I mean, by the same rationale. So I look at that and I say, okay, if SVCE, as a reader of the financial statements, SVCE reports on leases of a certain threshold. Okay, I get it. If there was a SPIDA of the same size or magnitude, then by definition, it must be material. That's, I think, the way you compare the two. Not by saying it's 0.25% of net assets or whatever. So, and again, I'm, as a reader of the financial statements, that's what my expectation would be. And when I look at this, there's one more point that you have to consider. And that point is, what's the accumulated error that you're getting in your financial statements? You can say in any one year it's not material, but when you take several years errors in a row, they start to accumulate. And then what's the reversal of those errors? And how's that reversal going to come into the financial statements? So it's not like any one year is not material, but the cumulative impact can become material. Having said that, then you say, is this a problem that we've got historically that we would have to treat as a prior period adjustment, or do you just want to treat it prospectively as a change in estimates? And you don't have to restate anything for a change in estimates. You're applying it prospectively. And I would recommend you think long and hard about prospective treatment. And I would concur that we don't have to do any restatement, which you want to avoid at all costs. But prospectively is different. And then in terms of you, Mike, you also mentioned that we had a discussion, or Aubrey, you mentioned we had a discussion on this before, and which I did, and Mike, I think John was involved in that discussion. So while I'm comfortable, I'm not comfortable, while I may have had heartburn in the September 30th, 2024 statements, I would have major heartburn in September 30th, 2025. So, and we can have a discussion on that, or that's where I personally am coming from as a licensed CPA and being associated with these financial statements. And this may be kind of a whole bunch of accounting talk and whatnot, but that's the way I see things. And I've got professional ethics that I have to comply with. So we could continue this discussion. Kellen, you could say something if you wish, or we can move on, because this is a discussion item.
Sure. So obviously deciding what you want to include or not include in the financial statements is strictly a management's decision. I would just add that I want to clarify that this is not an item that was quote unquote missed. This was something that we discussed with Mike back in the period when it was going to be implemented, reviewed his analysis, and also concluded that it wasn't material from our perspective. And I would just say that we wouldn't want to be associated with financial statements that are misleading in any way. And so we feel under professional standards, clearly our opinion is that the financial statements are not misleading, but that does not preclude management from wanting to include other information that they feel is valuable to the readers. So essentially, we're happy to go with whatever management decides to do, whether we want to include it or not include it. But I just wanted to clarify that this is something that we did look at quite extensively, not just the year that it was implemented, but then we're, again, to your point, we're required to look at it each year to make sure that the cumulative effect of this is not something that would be material.
What I'll do is, if there's no more discussion, I'll ask for public comment on this item. And if not, then we can move on unless you want to discuss this further.
No, I think public comment is fine. As Mike said, we are going to work with the finance committee.
Yeah, I'll just respond as well. I think your perspective is certainly a fair one. I would also just add, given my limited role on this committee, I think it's also great discussion from what I'm hearing, for this eventually go up to the board, exactly that kind of consideration of what would be that threshold. And I think you're adding valuable perspective in terms of the time horizon where it could become material. So I don't have more to add, but I think it's a fair perspective and not one that we necessarily have to resolve today.
Yeah, I would echo exactly what you said. With respect to as far as next steps, I know there's no action or a recommendation related to this item, but it seems like the policy perhaps is a logical next step for consideration to develop that framework of how you define the materiality. And that way, it's clear to the committee as well as to the board of what's acceptable and what's not with respect to disclosures.
Okay. With that, if there's no other comments from the committee or management, then I would like to open this for public comment. There's no one appearing here in person. If you're appearing remotely and you'd like to make a comment on this item, please raise your virtual hand.
No comments on this item.
No one wishes to comment. In that case, I'll close public comment on this item. And we'll move on to item number 3, SVCE Financial Audit Kickoff. And it's back to Mrs. Kellen.
All right. Thank you. Can everybody see my screen?
Yes.
Fantastic. And I just want to say too, I'm always appreciative of seeing these type of conversations about what to include in the financial statements and what constitutes materiality to the readers of the financial statements. at an audit committee level. I think that's very appropriate and just continues to demonstrate a high level of integrity among the board members. Moving to our kickoff for the year.
I will say that I love the picture on your first slide.
It's very peaceful. It's not too far off from my view from here. It's not quite that nice, but it's not too bad. Perks of Santa Rosa and Sonoma County. So this is just a quick introduction to your audit team. My name is Kellen Gilbert. I'm the lead audit partner. I've been working in public accounting for over 17 years, specifically focusing on government entities, and I work with multiple CCAs throughout the state. And also returning is the same engagement team that you've had for the past 2 years. Alejandra Schaefer is the engagement supervisor, and Alana Rico is the audit senior associate. So now with the changes, it's been a little bit of a bumpy name change for us, just because of the multiple moving pieces, and it can be a little confusing. But as of January of 2025, we formally and legally joined combined practices with Kosmatka, Donnelly & Co. A little bit challenging to say 3 times fast. And the partners of Passini & Brinker formally became partners of then KDP. That was always part 1 of a multi-phased kind of restructuring, with the purpose being to improve resources, having a bigger investment in technology, something that we see is vital going forward, wanting to make sure that we have the capabilities to invest in our people, so that we're able to provide even greater services to our clients. So that was part 1. Part 2 was us as well as KDP. We officially rebranded with about 20 other firms, excuse me, and rebranded to the name Sorin, and that's where we are currently at. We have about 20 locations throughout the U.S., and we're currently just around the 50th largest firm in the U.S. That being said, the biggest question that I continue to get is, what does that mean for me, for my clients? And I want to explicitly state that there's no changes to your engagement team. There's no changes to the cost. There's no changing to the timing. You're going to continue to be getting the same service from the Santa Rosa office that you have been currently getting. One reason that we really liked this merger was the fact that we were able to keep such levels of control at our local offices, so that we're able to continue to provide the same level or better of services to our clients. And then this is just a recap of the audit timeline. The audit tends to start mid to late October into November. Field work is typically 3 or 4 weeks once we've gotten all the support. Financial statements are scheduled to be available in early January, and so that we can provide drafts, have the audit committee review and provide any follow-up questions. And the goal is to then issue the final financial statements by the end of January, so that we can report to the board in February or March of 2026. And again, we just keep that little star there, just making sure that this is our current planned approach that we've been able to execute the past few years. But again, it is dependent on us getting all the information that we need to complete the audit timely. And then this is a slide that I just always like to go back to, and kind of fits in with the conversation that we were just discussing a moment ago, is that really the financial statements are the responsibility of management. Choosing what to include or what to exclude, that is the ultimate responsibility of management. Making sure that the appropriate financial transactions and relative internal controls are in place. Again, that's all the responsibility of management. our responsibility is to provide an opinion about the financials that are presented to us of whether or not those are free of material misstatement. Obviously, materiality is subjective, and we do have a methodology that is in accordance with professional standards that we use, but that doesn't mean that management can't have a different determination for what they feel is material. So again, management is ultimately responsible for deciding what to include in the financial statements. We're just providing our opinion on the accuracy of the financial statements. And again, considering risk of material misstatement, evaluating internal controls, performing year-end tests of balance sheet items, as well as reviewing and opining on the adequacy of footnote disclosures. So to perform our audit, we use what's called a risk-based approach. We want to make sure that we have a fresh understanding of the operating characteristics, practices, and procedures. We want to make sure that what is being described to us is actually taking place. So we'll perform walkthroughs and other ways to vouch that those procedures are actually in fact happening. We'll compare our knowledge to similar entities within the industry and professional guidance. And again, reviewing those procedures and controls over the significant transaction cycles to make sure that they're in place and functioning. We will follow this up with a SAS 114 letter, which is again a letter from us to you, which basically restates a lot of this information that identifies what we consider to be significant risks and our response to those risks, as well as other general audit professional standard requirements. The letter will be addressed to the audit committee, and we will send it no later than early November. And this is just a partial list, and this is based off our planning, but obviously when we get our final numbers, these areas can change. But at this point, these are our anticipated significant areas of focus. And again, this is not meant to be an all-inclusive list, but just a short list to give you a flavor of what we do. Revenue recognition is always a significant area of focus. With that, we will test the occurrence of revenue and the existence of accounts receivable. We'll do that through multiple different procedures, including taking a sample of customer billings, relate total cash received during the year to total revenue as just one of many analytical procedures. And then we want to also review revenue recognition throughout the year just to make sure that it's being done consistently. Cash is obviously a critical area to any organization. It's relatively easy for us to audit. We send confirmations to third parties so that we can receive independent direct audit evidence from them to vouch those cash balances. Accrued cost of electricity is another large area. We want to review cash disbursements payments to make sure that we can trace those to the underlying liabilities to make sure that they're recorded at year end as we're trying to test completeness of the liabilities of the financial statements. And then lastly, the review of the financial statement disclosures. We want to make sure that they're materially complete and without bias. And with that, I'm happy to answer any questions.
Do we have any questions on this? No. I don't have any questions. I have a few comments. First of all, I think it's great that your firm merged previously and is merging again or creating your Soren. And I think it's wonderful for your staff and for the shareholders, for the partners to have more resources. And I think that gives us, SVCE, better service. So I think, our costs are not going up, and I think it's a win-win all the way around. So I congratulate you on going through that. I went through with Ernst & Young, a merger many, many years ago. And it's quite an event. So congratulations on that. The other thing is, you didn't mention on your audit approach, looking at, you talked about cash, but that's also securities, right? Because we've got quite a securities portfolio and the valuation of that. The other thing is GASB 62 that you talked about, and you're looking at GASB 62. You will be we're looking at a September 30th, 2025 implementation, or beyond that?
For fiscal year ending September 30th, for which the audit is about to begin.
Right.
So we will be reviewing the numbers with Mike, seeing where we end up, and we'll make a decision as to within the board guidelines what amount to defer. As I said, roughly we're in quite a large amount, and then
that'll be management's decision.
Management is the board has given us.
And then Soren Accounting would then audit that to make sure that it's disclosed appropriately. I just want to make sure that we all understand what's going on with that, which I see as a very positive thing. I would also ask as you're doing the September 30th, 2025 financial statements, and you're preparing those, Mike, and then Kellen, you're auditing those numbers, that you kind of look at what's going on with the regulatory environment that we're in, and how the regulations affect our financial results. So I'll just leave it at that. But I think part of being on the audit committee is for us as the audit committee to identify to you, both on the accounting side and on the audit side, what we as board members see. So those are my only comments. And with that, on this is just a discussion that's going to lead into the next item. But I want to take public comment on this. If you're a member of the public and you wish to comment on this, you're appearing remotely, please raise your virtual hand.
No public comment here.
No hands are raised. With that, I'll close public comment and bring it back. This is discussion only, so we're not making a decision. So we'll move on to the next item, which is an action item, recommend assignment of auditor contract to Soren CPAs.
I think Mike's gonna talk to that.
Mike's gonna talk to that, okay?
Hey, folks. You heard a little bit already on this, but our auditors have changed names twice over the last year. This committee has recommended to the board, and the board adopted the previous name change. And they are changing, we believe, to the final name change, at least for the time being. And so we're looking for a similar sort of formal recommendation from this committee to the board to accept that name change. The board does select the auditors as opposed to staff selecting the auditors. And so we're seeking this recommendation here to support that recommendation to the board to continue working with the same auditors under their new name.
What I'd like to do is give the audit committee a chance to ask questions, have public comment, and then bring it back for a motion. So any questions at this point for staff?
No questions.
No questions. With that, I'll open public comment on this. There's no one here in the room. If you are a member of the public and you're appearing remotely and you wish to comment on this, please raise your virtual hand.
Public comments, Chair.
No public comments. I'll close public comment on this and bring it back for any final comments and or a motion.
Just noting that this will be included as a consent item for the agenda.
So this would, we, the audit committee would recommend this to the board, and that the item would be a consent, an item on the consent calendar for which meeting? The one?
It's the
October meeting.
Yeah.
So that's November meeting. Because the agenda's already gone out.
Correct.
That's
They were
true,
posted.
Okay. With that, I would entertain a motion.
I'll move the recommendation of the assignment of the audit contract to Sworn CPAs.
We have a motion and a second. With that, if we could have a roll call vote, please.
Chairman Kachuk,
Aye.
Vice Chair Lopez.
Aye.
Committee Member Sangha.
Aye.
Thank you, that motion carries.
Thank you. With that, we're now on to item 5 on the agenda, which is information technology and cybersecurity assessment update. This is discussion. And we've got Nick here, and you presented, I think, at every audit committee meeting.
Yes, today's will be much faster. Yeah, we're just doing a high level today. We're not going to get into all the specifics of the findings and the results from the last audit. So yeah, I'm Nick Donato, Director of Operations. The team consists of Brett Siriani, who's off today, but he's a senior IT analyst, and Phil Wang, who will be in here in a couple minutes. He's the IT support specialist. Okay. You see on all the slides. Sorry. All right, so yeah, today is just going to be a review of the IT audits that we are currently under, and then also the ones that we have. I didn't push that button. Okay. Figure this out. And then also give you a snapshot of what the current assessment is, and then also a current score. We talked about our score over the last several years, just give you a quick update on that. And then also what to expect at the next audit meeting in February. All right, so first in the IT department, we made some changes. I was recently promoted to Director of Operations. We've onboarded Philip Wang, who's an IT support specialist. We offboarded the MSP, the managed service provider that was doing some IT support for us. So we brought it all in-house, which Phil helps a lot with that. And then I'm currently interviewing people to backfill my old position of an IT manager. So we're in the final stages of the interview process. Hopefully within the next few weeks, we'll have somebody identified.
Congratulations.
Thank you, appreciate that. We also did a new RFP with outsourced with a virtual chief information security officer service. So we get a portion of a VCSO, probably about 10 hours a month. So we get the expertise of a VCSO without having to have somebody on board on staff the whole time. We did an RFP, we decided to stay with our current vendor, but yet we've added to the services. So instead of having one, we have like access to 4 different virtual CISOs. Each of them offer some specialties and some industry knowledge that we weren't getting with one. And one of the big things was removing the MSP, relying on outsourced IT support. It's not always the easiest thing to do when you're dealing with, you get part-time people who have different ideas of what customer service time should be, or even on the cyber side, their version of cyber is to sell you a service maybe instead of just trying to figure out what's best for our organization. So we brought it all in-house, and we run it based on the virtual CISO's guidance versus the MSP's guidance. Right. So we currently engage, sorry, I'm avoiding that. We currently engage in 4 different audits. The items in blue are ones that are mandated from the CPUC. So we have the annual data privacy report, which is every year. We have the AMI audit, which is every 3 years. And we have the security assessment that we chose to do, and we've been doing them for 2018. I think we started doing IT audits and assessments back in 2021. And then we also started doing tabletop exercises 2 years ago. And we'll go over those in more detail on this next slide. So this year we actually did all 4 audits. So sometimes we only do 3 of the 4 because they're once every 3 years. We had our, so we had the AMI audit every 3 years that was due in April. So we sent our report in April. It was a clean audit. It looks at how we manage our AMI data, who we share it with, how we share it. And then also does a little IT audit. So it looks at some of our controls that we have in place and then how we govern that. So the next one will happen in 2028. The AMI data privacy report that we do every year, we sent that in August as well. It was clean. So we normally send a report of all the vendors that we share data with in that calendar or in that audit year. So for us, it's anywhere between 20 to 35 vendors that we have to report on. And then we make sure that any vendor that we share data with, that we have a contract with them or like an NDA. There's a lot of steps in the process that we have to show to them. The next one of those audits will be due in April 2026. And the security assessment, this is weird to say. I mean, we don't really complete the assessment. It's like an annual assessment. It starts over every year. So it's not really like an end of it and it starts again. But we are currently starting the next version of this assessment in next week. Next Wednesday and Thursday, we'll be doing the audit. And this security assessment actually touches all the teams. So we'll have HR, finance, legal, a representative from programs as well. So we do interview all the different functional teams, and then it gets put into our scorecard and our road mapping. So completed technically last September, and then we've been doing roadmap items since then. And then starting again this October, and we'll be doing roadmap items, for the next calendar year as well. Tabletop exercise, we did complete it back in January of last year. Tabletop, we choose an incident and we choose a severity. Last year we did a 9. It was a business email compromise, which led to complete shutdown of Microsoft 365. And then it tests you on how you respond, how you troubleshoot, how you work on your incident response plan. And then it brings in other people from other teams, and it just overall assesses how you would react if and when something does happen. This year we'll probably do a 10, maybe a 9. 9 was tough. But we have a bigger team now, so we can actually have the bigger, more technical knowledge to troubleshoot these issues. But the most important part of that is just how you respond, testing your IRP, making sure your cyber insurance is ready, and then we can call them and then get them involved. So we do engage everybody that's in the IRP. So that'll be, again, probably January, February this year. And then we can report back to you in the February meeting how we did on that as well. All right, so security score, we talked about it for a couple of years now. We used to have the, I think it was like the rise or the mad dash to the perfect score. Then we changed it to the crawl to 820. We're sitting at a 785, which is higher than last time. The score by itself doesn't mean a whole lot, but when you think of the score, at every point we go higher, that means we have improved our cybersecurity posture. So we've done something to get a better score. So we've either added a control, added documentation, we added a new tool, did more training. So all those things reflect on our score. So the lower the score, of course, like a credit report, the lower the score, the worse your cybersecurity posture is. Right? And this is tied to the NIST and ISO frameworks. So the current assessment that we're finishing right now is based on 401 total controls. So each one of those is an interview item that we show how we're doing with it, and then we get it. If it's done, yes, we get points. If it's not done, then it's on our roadmap. So this year's 401 items. As we move forward to this next assessment, they're adding 20 new controls. So that score next time may not be as solid as 785 because there's 20 new controls. And then the controls that currently existed are going to be changed and being updated every year. So we're not. So it's based on 2025 items instead of 2022, right? So there's always something that changes. So keep that in mind when the score comes up in February. It might be a little bit lower, but there's more controls. So now there's 421 items that we're going to be scored on. So hopefully we've already addressed some of it, but we didn't even know what they are yet until next week. And again, those controls cover everything from the admin controls to physical controls, internal controls, which is like behind the firewall, and the external controls, which is everything from the outside access. So people trying to get into our environment, and then inside of our environment, and then also it covers like physical security as well. So a lot of these things will be changed when we move into our new facility. We'll have to look at a lot more things that we've actually put on the register as items that we accept. Because now we actually have a building. We actually have to have cameras. We actually have to put up maybe some security pillars in case cars drive into your building. Right? Sorry, like, too soon for that probably. So yeah, so those things next year's time will be a little bit different as well. Actually, no, next this year, next time this year, it'll be different because we'll have all this. So we probably have accepted 25 risks because we don't have a building yet. And then what to expect at the next meeting, just be the update on our cyber score, the results of the next security assessment minus specific findings, just stuff that we can talk about like an open session. And then we'll have a better understanding of what these new controls are, and then we'll kind of explain the methodology, what's different, what's new. And then just to really try to decipher how the score changes based on these new controls. And then we'll talk about the AMI privacy report that will be starting around that time to be done in April. And then try to give you a status on the tabletop extras at a high level as well, maybe what the event was and how hard it was. I think that was it. If there's any questions or.
Any questions? This is a discussion only, information only item.
Yes.
Questions from the audit committee?
I don't have questions, just given the familiarity from just carrying this over from year to year, but congratulations on the higher score. I think it's a good place given how challenging it is that level to move up. So and 4 in 1 year is a big task.
Yeah, this one with the AMI audit every 3 years is a lot tougher because there is like an IT audit part of it too that we have to provide information and then that adds more to the remediations that we have to work on.
Yeah, no, but I think this is always great work.
Yeah, appreciate it.
Is Kellen still on? Or did he drop off?
I believe he dropped off.
Okay. So my question for you is, we outsource to IT service providers, and we also outsource to our accounting. How does the security with both of those types of entities impact your IT security, procedures, risks, etc.?
Yeah, so we stopped doing the IT outsourcing. We saw that as being a possible risk. But we did up until recently. The accounting side of things, it is always a risk, but we do have controls in place, which is part of our assessment dictates what kind of controls that we would need. So like if you're paying a wire, we have a control in place to make sure that the right people have access and permission, just like if they were internal. So we do a lot of the internal prep work when we have a vendor that has access as well. If I'm not mistaken, Maher doesn't have access to everything. They have Bill.com, but they don't have access to River City Bank. So there's controls and
They agreed access, but we pay the bills, we pay the money.
Okay, what about our data that's held by Mayor?
So I think we do inspect there, right?
yeah, so part of the vendor agreement that we have with Maher requires them to meet a certain threshold of cybersecurity. So like, if it's audits or SOC 2s or ISOs, and then they have to, and they agree to those terms before and they have to have cyber insurance as well. I think up to $5 million for most of our vendors. So we put a vendor review process if they're sharing customer data, especially like anybody that shares AMI data that we share with, we really scrutinize and make sure they're doing the correct, or the items that we requested them to be doing on the security side. And that goes into, Maher just signed a contract recently, so that was reviewed again. And then they're aware of what our requirements are for them to be a vendor to sign with us.
And do you review that as part of your ongoing audit process?
We
Their
review,
compliance with what they say they were gonna do?
no, I will be honest now. When they sign the contract, we look at, or we talk to them about certain things, and then after that, I guess it's based on their signing the contract and agreeing to those terms. But we don't have a process, because we can't, like, I wouldn't want to share my security posture with outside vendors if I didn't have to. And a lot of times, people would not want to share that, but if they sign off saying that we're doing these things, but we wouldn't want to share everything that we're doing externally. That opens up you as a risk as well. So I wouldn't expect them to do that, but at least to acknowledge that they're
Do
doing.
we get SOC 2?
We're not SOC 2, but we require our vendors that we share AMI data with, that is in that's part of our contract. Maher, I would have to double check on their contract. It's a little bit different because it's not financial, or it's not AMI data, but. Yeah, and Mike's on too, so Mike can, if he has anything to add. No.
Yeah, no, that is, I mean, it's an important part of the contract. I know we looked at it pretty closely. There was some back and forth on that topic. I know the cyber insurance is a big one. The SOC report is not required. That's, I don't think, applicable in our situation. We don't handle the MI data. We're not moving the money, like Amrit said. So I know we take a look at those standards, and I'm sure at some point in the past, Nick, maybe you and Ben have gone over certain protocols to make sure that we all understand what you're asking for. So, but yeah, there's a whole section of our contract for that.
Okay.
I wasn't aware of Mike Maher was on, but I was referring to Mike Callahan. If you had anything, sorry, Mike.
We have Michael, we have Mike.
I didn't know Mike was
Oh,
on.
okay. Well, we were talking about the accounting, so I figured that was the mic in this case.
I didn't want to put you on it.
Yeah, nothing else to add for me.
That's fine. I didn't even see him. Yeah, so like on the vendor contracts, if it's AMI data, there's a little bit more restrictions on the SOC 2 requirements than on the Maher side of things.
I'm dating myself, but I'm back in the SAS 72, I think, era. I don't know if you remember that, Mike, but anyways. Okay, well, I wanted to ask those questions. I have no further questions. And the board member or the audit committee members have any more questions? No? With that, I'll open it for public comment. If you're appearing remotely and you wish to comment on this, please raise your virtual hand. No one wishing to comment. I'll close public comment and bring it back. There's no decision that has to be made on this, information only. If that's the case, do we have any committee or staff remarks? No. With that, we will adjourn at 2:06. So I think we are 1 hour to the dot, to the minute. Thank you very much, everyone.
Yay.
Thank you.